Hello students, welcome to today's session on past adjustments. So before I take you to understanding the concept of past adjustment, let me give you a brief idea about what exactly is past adjustment. So what actually happens sometimes is that while the accounting transactions are being posted in the books, uh, there are possibilities that errors of omission or posting, or we can say posting errors or omission errors are made. All right, and the books are closed also by at the end of the accounting period, and second accounting period is also started. Later on, it is found out that, oh my God, certain errors were made, omissions were made. What to do? The reversing of the entire accounting is going to create more errors. Okay, so the best part is making an adjustment entry then and there. So it's like making adjustment. It's like rectification of those records. This is what right. And since we are making this rectification of past errors, so we call it as past adjustment. Now, the past adjustment entries can be passed through two methods. That is, one, the company can have, the firm can have a profit and loss adjustment account and pass the entries through that. Secondly, the whatever are the adjustments may be made directly in partners' capital accounts. Okay, so yeah, we can have these two methods, and I will tell you. I will tell you use through these two methods only. Uh, I will tell you both the methods using one question. Okay. So now let us take this question here. So it says there are four partners in the firm, A, B, C, and D. They're sharing profit in this ratio. Their respective fixed capitals on 31st March 2010 were 60,000, 90,000, 120, 90,000 respectively. After preparing the final accounts for the year ended 31st March, it was discovered that interest on capital at the rate of 12% per annum was not allowed, and interest on drawings amounting to rupees this respectively was also not charged. Necessary adjustment journal entry should be passed. Now, so first thing first, what we are going to do in this is now we are going to make an adjustment table. Adjustment table is a requirement, so we will be making this adjustment table, and using this adjustment table now we will be solving our question. All right. Now let us see what all has to be mentioned in this adjustment table. First of all, the amount which was left or omitted and not recorded will be mentioned here. So, amount not recorded. What all was not recorded? Interest on capital was not recorded, and interest on drawing was also not recorded. Let us record these things and add them. All right. So, interest on capital, this is their capital amount. Interest to be charged at 12% per annum. So 12% of 60,000 would be 7,200. Okay. So let us write 7,200 here. Then for B, 12% of 90,000. 12% of 90,000 becomes 10,800. Okay. So this is 10,800. Now let's come to C. 12% of 1,20,000. 12% of 1,20,000 is 14,400. So this is 14,400. Now for the D, it is again 90,000. So 12% of 90,000 again will be the same amount, that is 10,800. So 10,800 is mentioned. Now interest on drawing. Please understand, interest on capital is given to the partners interest on drawing has to be paid by the partners to the firm. So we are supposed to deduct this amount. Okay, dear? Now, interest on drawing is already mentioned here. So this 2000 gets deducted here. Okay. Here, this is 2500, which will be deducted. Then here, this will be 1500, which will be deducted. And here, this would be 1000, which will be deducted. Right? Now, finally, how much is the net? Net is what? So, 7200 minus 2000 is 5200. Well, 10,800 minus 2,500. This becomes 8,300. 8,300. Then 14,400 minus 1,500. This becomes how much? This becomes 12,900. And the last one, 10,800 minus 1,000. This becomes 9,800. Okay. Now let's sum it up. Let's see how much amount was actually not recorded. So that we should know. So if we sum all these numbers, we get this is 36,200. Okay. So this 36,200 was not recorded in the same manner. So what happened to this amount? Obviously, because as we know that whatever is the profit of the firm is distributed among the partners in their profit sharing ratio. So if this amount was not recorded or distributed to the partners in this ratio, in this proportion, then how it was distributed? It was distributed in their profit sharing ratios. Clear? Okay. So we can write the next one, amount already recorded in what ratio? This amount is, as I said, already recorded in this ratio, in their profit sharing ratio. So we will be the now. How do we divide this ratio? This obviously now if we make the working note here, for A, suppose I take 1 and likewise we are going to find out the values for others as well. So this is how much? 4 plus 3, 7, 7 plus 3, 10, 10 to 12. So this becomes 4 upon 12 multiplied by 36,200. Okay. And the amount that we get here is how much? 12,067. Okay. So this amount, one second. Let me, okay, fine. Yeah, 12,067. Right. So 12,067 comes here. Now, similarly, 3 upon 12 of this amount, that is for B, this amount will be how much? This amount will be 9050. 9050. Right? And then C, for C, this amount would be 60. Sorry, again for C, again this would be same amount 9050 because the ratio remains same. And for D, it is 2 upon 12. 2 upon 12, that means this amount becomes how much? This is 6033. Now adding all these numbers together, we get the same. Now let us find the difference. Okay. Difference that is between this and this. This is already recorded and this was supposed to be recorded in the box. So how much is the difference? Okay. So for A, the difference is of 6,867, 6,867, and as you know, more amount is recorded in his account, whereas less was supposed to be recorded. So this would be the surplus will be debited from his account. Similarly, out here, more is recorded in case of B and less was supposed to be recorded. So again, we have excess amount here, surplus is there, surplus is of 750, which will be debited. Okay. Then in case of C, more was supposed to be recorded, less is recorded. That means here there is a deficiency, which so amount will be credited. This deficiency is how much? 3,850. 3,850, and this is going to be credited. Okay. And the last one, here also the same thing. More was supposed to be recorded in this, or more was supposed to be given in this manner, whereas less have been given to. So again, he also needs to be given more amount, and that more amount is 3,767. So this is 3,767. Okay. Right. Now we have done till here. Now the first method, that is using profit and loss adjustment account. So how do we do this? Okay. First of all, the amount, the excess amount which A and B have to be given to P&L adjustment account. So the entry would be, now I'll just write first method and second method. Using the first method, what do? We do A's capital account, debited 6,867. Then B's capital account, debited 750. Okay. This amount goes to P&L adjustment account. Now, if I total these two amounts, how much do I get? Okay. So let's just total it very quickly. We have 6,867 plus 750. That is 7,617. Okay. So 7,617. Now, if I total these two amounts, I should get the same amount. Let's do it. 3,850 plus 3,767. 7,617 again. Okay. So that means what? Now from this P&L adjustment account, the same amount will be distributed to these two partners in this ratio. So the next entry now would be adjustment account, debit 7,617 to C's capital account, create 50, then to B's capital account 3,767. This was using the first method. Now second method is directly in partner's capital account. Okay. So now using the second method, amount is debited from this account and directly credited to this account. Right? So that means using the second method, this P&L adjustment account in between is omitted. So that's all about this that's all for today's session, guys. I hope you all understood the topic. Keep practicing. and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you very much.